We started investing in 2011. 2011, we started off with 5 basic building blocks. We had a passive global equity, we had a couple of gilt funds, we had this diversified growth fund, and that was it. And we were trying to maximize kind of return and minimize risk with those. And it was broadly speaking, it was about a 60-40 strategy for some of those funds. Every single year since 2011, because we've got more money, we've been able to make it more sophisticated. And now we're at the stage where we're adding in kind of private equity funds all over the place. We've just added in timberland. That's a new asset class. We're investing in kind of forestry in the US and things like that. These are all alternative sources of return. And the aim, I mean, the whole point of kind of diversification is not just spread it out, it's to try and kind of reduce correlations in different economic cycles. And what we don't want is we did really well in 10-year tech boom, but then we did terribly afterwards. We want to find growth in all different kind of economic cycles,
which means Bitcoin.
We've had conversations about Bitcoin. That's not where we're going at the moment.
Yeah, you probably missed it at the time of recording. Wait for it to crash and pile in.
Yeah,
little 1% of assets would do something naughty, wouldn't it, to the price of Bitcoin? I'd imagine.
There's we're not quite there yet with Bitcoin. It's something we keep under review.
There's going to be a lot of people listening to this that'll be like, for one of the biggest pension companies in the UK to say we're not quite there yet, and not to just spit on the floor. I think they'll probably take that as bullish. That was a clip from our conversation with Paul Todd, who's the Chief Operating Officer of Nest Invest. If you want to see the full conversation, you can access that right here.
I just found out I have a pension with Nest. I did.
You did?
Yeah, I did. It's true.
Loads of people probably don't know that they've got them, to be fair.